Hello, hello, and welcome to day 6 of our financial setup challenge for 2024. I am Elizabeth Booker, and I am your money guide throughout this 7-day challenge. And today we are talking about investing. So we are going to set ourselves up to start investing. So if you have your workbook with you, you can see that day 6 is called our investment adventure. I find this title a bit funny. I hope you find them funny too. But investing is an adventure. And and I think I've shared my story about investing with you before, but if you haven't heard it, I'm not going to share it today because it's quite a funny and a long one. But it is an adventure. There's ups and downs, and I want you to be prepared for that. And that's what we're going to talk about today. So before we get into the workbook, um, let's quickly talk about what exactly investing is for those who don't know. So just in a easy to understand way, investing means putting your money to work so that it can grow over time, right? So we know when we work in a job or in a business and you provide a service, you get money in return, right? So you are working as a person, or you're putting your time to work, you're putting your resources to work, and you are making money. If you have a job, you are actually going to work and you're making money. With investing, you are no longer doing the work. You are actually putting your money aside to work, and the money is making money for you. So investing is like having an employee. But as with all employees, you know, um, you have to train them, you have to be patient with them, you have to give them the skills they need to grow. Otherwise, they may leave you, or they may not grow as you would like them to. And that's why we have to invest rightly. We don't invest in Wealth from Little. We don't invest in get rich quick schemes. That is not the way we go. And now you might hear, especially in 2024, with the cost of living crisis and inflation, you might hear of loads of what I would call pyramid schemes, where someone tells you, come and invest in this particular thing, you'll make so much money in 2 months or in 3 months, and you don't understand what the thing is. You don't know how the money is going to grow. The person they're speaking to you cannot explain where the growth is coming from, then I wouldn't go for it. I wouldn't go for a get rich quick scheme. It is very risky. Few people win and many people lose. So that's what I mean with regards. And many people think that is investing as well. There are loads of different types of investing is such a broad term, right? So basically, it means putting your money to work so it can grow over time. When you invest, you use your money, and with regards to investing in the stock market, you use your money to buy assets like stocks, bonds, real estate, or art, or even collectibles, right? And the key benefits, the big benefits of investing is that it provides the potential for your money to grow so much faster than just saving it in the bank. So this is a big key in growing long-term wealth in our society today, based on the way our financial society is set up, the way our economy is set up. Okay. So I'm going to share some important reasons why investing is so important. Important, right? So first, your money that is invested beats inflation, right? Again, you have to check this, you have to check your interest rates, but you want your money to be beating inflation. Investing gives your money the potential to grow faster than the rate of inflation. And this is so important because in a year's time, in 10 years' time, you don't want to have put 100,000, 200,000, 500,000 aside and have it worth half of it. Secondly, it's let's pause. My doorbell just went. I love it. So sorry about that. I just love the sound of my doorbell. It makes me feel like something good is coming, is ringing on my door, because I'm always expecting something. Okay, so back to where we were. So yeah, second reason why investing is so good is that it unlocks the power of compound growth. So with investing, the money that you earn, your profit, makes more money for you. So let's say your money has children. Let's call the profit your money children. Those children go on to multiply and make more money for you. So the children have grandchildren, the grandchildren have great grandchildren, and all you had was money in the first place, right? And the money has money children, money grandchildren, and money great grandchildren. So it keeps on growing, right? And not just the money that you put in, the profits as well grow. So it's really amazing. And then the third reason is it really helps you reach your goals much faster. And especially if you're trying to reach big goals like retirement, right? And if you are trying to reach retirement, it will help you reach that goal much faster. Then the fourth reason is almost like it's not actually almost, you are like a part business owner. Because when you buy stock, you become a partial owner in that company. And therefore, you benefit from the growth of that company. So you are like a business owner. So, for example, let's say you love iPhone, right? You love Apple products, or you love Nike, right? You like their shoes, or you like drinking coffee in Costa. Maybe you just like going to the mall a lot. Now, every time you spend your money in any of those shops or businesses, they are making money off you, right? They are growing and you are giving them money. You are just a consumer, right? But when you are investing in that company as well, when you've bought a share of that company, you're now a part owner. You are a shareholder, right? And that means you're not just a consumer when you spend your money there. You're also a producer, because even though you're spending your money there, you're also getting money back, because as the company is growing, you are also growing. Your finances are also growing. And then with investing, you can also diversify your assets. And what I mean by diversification is that investing allows you to spread your money across different asset classes, so different categories like bonds, stocks, real estate. Like and this allows you to reduce risk. There are different ways of diversification. You can diversify across classes, like different actual categories, like property, very different from bonds, very different from stocks. It's very different from art and collectibles and minerals. And you can also diversify in the terms of industry, like fashion. If you like fashion, you can invest in fashion, food, defense, oil and gas, um, renewable energy, non-renewable energy. You can, and you can also diversify in terms of geography. So you can buy stocks that are based in the UK here. You can buy stocks based in North America, Middle East, Africa, Asia. And so what that does is that it reduces risk, because if there is a sudden, if you love investing in fashion and you're only investing in fashion alone, what happens if suddenly there's a crisis with all the cotton crops, right? And they were all being infected with some kind of disease, hypothetically speaking. And so what happens to the fashion industry? Because most clothes are made from cotton, and if they can't produce enough cotton because of this um, prices that I've just made up, then, and all your money is in fashion, then producers won't be able to produce the cotton to give to the suppliers, who won't be able to give to the retailers, who won't be able to give to the consumers, which is you, like as a finished product. So it might make your investment a bit shaky. At the same time, if you're only invested in transportation and all the roads get closed off, for example, during COVID, then you might not make as much money as you would have been able to make. But when you're invested in multiple areas like pharmaceuticals and medicine and fashion and transports, then you have diversification, right? So that is kind of what diversification means. Okay. So, and finally, the sooner you start investing, the more time you have for your money to grow. And that is really, really cool. Cool and important, because if you have a lot of time for your money to grow, you don't need that much capital to be invested for you to gain the type of returns that you want. Okay, let's get into the workbook. And this is about, in order to complete this workbook, it's important that you have had a look at the other sections. First, you know your goals, right? You know exactly what you want to achieve in terms of all your financial goals, including investing and savings. And then you want to have definitely looked at the debt demolition plan from yesterday. Because if you have a high interest debt, you want to try and work on that quickly, because you want to if you do have high interest debt is almost like investing, but the other way around, in that the financial companies make the money, right? So whatever interest you're paying, if it's higher than your investing interest, you are still going to be paying out more money than you could be making. You want to definitely attack all high interest debt quickly. So promise me you'll do that. And if you need help with that, do reach out. So first step, I want you to reflect on what your current understanding of investing is. Why is this important? I'll tell you. Please never invest in anything you don't understand. I'm not saying you need perfect 100% understanding, because I don't want to get into any form of analysis paralysis or excuse making, but I want you to take responsibility of your investing journey. Don't just let someone don't just wait for someone to feed you, to tell you, put your money here, put your money there. Even if you have financial advisors, you need to understand what they are saying. At the end of the day, if anything goes right or wrong, you are going to gain the you are going to pay the consequence or gain the benefit. So understand what you are doing, please. So, and it doesn't have to be perfect, as we talked, and we're going to talk, I think in the okay, so I'm going to give you a bonus section, and in the bonus section I'm going to talk a little bit about continuous education. And it's so important. Please, 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 2024 is not the year to be lazy with your financial literacy. So understand what your current understanding of investing is. I know probably it should have been something that they teach you, just like they teach you when you're crossing the road, look left, look right. They teach you those things in school, and really they should have taught us the basics. But if they didn't, we have a responsibility to teach ourselves. Reflect on what you know and identify areas where you may need more information or guidance. I may come up with topics or ideas of what I think people would like to learn, but if you know areas that you think that you would like to improve, you can send me an email and say, actually, I want to learn more about this specific area, right? Then second thing is, are there any fears or uncertainties you have about starting to invest? You want to know this because this will stop you. What are your financial dreams and goals? Take a moment to think about what you want to achieve with your investments, and whether it's a comfortable retirement, building a home, funding education, whatever it is. Just have a look at that. Then, how comfortable are you with taking risks, reflecting your feelings towards potential gains and losses? As I told you, investing can be like an adventure, ups and downs. So be aware of that. It's sometimes we lose, sometimes we win. Okay. Overall, we will win, but in the interim, you want to be sure you're comfortable with taking risks. This question is, how long do you plan to invest your money? You want to think about your time horizon, as this can really influence your investment strategy. So if you're investing for the short term, it might require like a slightly different approach from investing for the long term, right? And then the sixth question is, what is your starting point in terms of available funds, which is like, how much do you have to start with? You don't necessarily need a lot to start with, but it depends on where you are and where you want to go. And reflect on the amount that you can comfortably invest without impacting your daily life. Now, you would know this amount because you have looked at your spending plan. Okay, so your action plan for today is to explore investing opportunities based on your risk tolerance and financial goals. And if you have ISAs, then start putting contributions into it. Now, your checklist. Clearly define your investment goals. Write down what you want to achieve for your investments, and whether it's saving for a rainy day or working towards a specific financial milestone. Secondly, understand your risk tolerance. Consider whether you lean towards, maybe you're a bit skeptical, so you want to reduce your risk, or you're very adventurous. You want to make maximum risk, maximum rewards, right? You're not going to be scared in the middle of the night because, oh my gosh, you're worrying about what your money is doing. This will guide your investment decisions and help manage your expectations. Thirdly, start educating yourself about basic investment concepts. Consider seeking financial educators to build your knowledge, right? From your spending plan, you can identify how much you can comfortably invest. Great. Of course, ensure that you have covered your fixed bills first before you start going into that, right? Then I want you to start learning about the concept of diversification and to understand how spreading your investment across different types of assets can help manage risk. So start that self-learning on your own. Research different investment options and look to starting small with the manageable accounts such as a stocks and shares ISA. Now, I know I'm giving you a lot of things to start on your own, and that's because I'm asking you to take responsibility for setting up yourself for 2024. So, and we are going to go deeper into this. I'm having a paid course in which I'm going to help you go deeper into this, but do start. No one else is responsible for your financial health except for yourself. There's this note section where you can write answers to your reflection questions. Now, see you in day 7.